Welcome, viewers. Thank you for joining us for another week of COVIDCASTJA at our new time, 7:30. So we've heard from our loyal viewers who have been here with us weekly. They've said to us, listen, some of us have gone back into the office and we would like the show to be a little later. And then we have some persons who are like, I haven't been able to join at all. So no, I want to be able to join when I get home. So thank you so much for joining us. We are at episode 15, and today we're going to be talking about lending and borrowing in an uncertain environment. Now, I ask this question every week. Have you received your memo? If you have not received your memo, please email us at sme@psoj.org. sme@psoj.org so that you can receive your weekly memo. So for those of you who are joining us for the very first time, and you're hearing that we're at episode 15, you're saying to yourself, so what have you been discussing for 14 episodes and where have I been? And how am I going to get the information for the last 14 episodes? Please just go to our Facebook page. So write to our Facebook page, to our YouTube page, the PSOJ Financial Access, and to the PSOJ website, and you will be able to binge watch and catch up on all our episodes. And let me tell you, there has been some rich information that has been passed by experts. We've had several experts over the last 14 weeks. So we've had episodes looking at what every SME should know. And our discussions are very, very granular because we want to equip you. So we go through things like, what kinds of discussions do you need to have with your bankers when you're going to get a loan? So we talked about the various bank relief supports that were available during COVID, and we had the bankers talking about how these various relief programs would work. What is a moratorium? What is a deferral? We talked about the art of pivoting your business. And I know a lot of you have been hearing this whole concept of pivoting. And we started discussing this concept very early. And we also went through all the different types of pivot: customer pivot, operational pivot. So we have an entire memo that you can now look back to assess where you are in your business and what are your capabilities for pivoting. We also talked about things like building your mental strength during this time. I mean, many of us have been isolated for months, and as we're going back out and trying to figure out our way as the economy opens, we have to be in a position where our mental strength is at its best. Worse too, when we are running a business and making decisions about our employees, making decisions about our products and services. Last week, we talked about making the decision about closing your business, because for some of us SMEs, that is a decision that has to be taken. Another very interesting episode too was our e-commerce bootcamp, where we talked about the various ways to take your business online. We also had human resources experts that talked about layoffs, how to manage your employees in a work from home situation. And many of us are still doing that work from home scenario. So I'm glad that you have joined us this week. And I know that you will be joining us for several weeks to come as we go through on a weekly basis with various experts, providing you with valuable information that will help to bolster your business or will help you in your decision-making process as you move through this COVID time. Today, we have with us our resident expert. He is a Jamaican who lived for several years overseas. He attended Harvard and worked on Wall Street, and he decided to return home to Jamaica. And one of the major projects he has been working on is access to finance for small and medium-sized enterprises. His name is Nevada Poe, and he is going to be joining us to lead us through a discussion on lending in an uncertain environment. Nevada, where are you?
Greetings, Rochelle. 7:30, episode 50.
At 7:30 though. Very different at 7:30.
Shadows and all.
So Nevada,
yes.
The economy, pretty much since June 1, we've been on a phased reopening of the economy. There have been recent reports that their restaurants are going to be allowed in short order to have dining experiences at 50% capacity. Hotels are slowly opening those who are able, but there is last week, I think the colloquial description you called it was a jugo kind of reopening, because it is a start and stop approach. Because of the nature of business, the protocols that have to be put in place, and as customers themselves are starting to head out on the road. But also that persons do have limited resources, as some people have lost their jobs. So as SMEs consider approaching their financial institutions, SMEs want to understand what are the kind of considerations banks will be having, and what are the kinds of discussions that need to be had between SMEs and banks. So Nevada Power, again, is the lead architect for the PSOJ AFFP project, which is the access to finance for small businesses, and he's going to lead us now. So Nevada, tell us a little bit, where are you going to start with us? Because I know, what is this jugo thing that you're talking about?
The jugo, yes, is our technical term at the PSOJ, the jugo economy. Okay, here's the situation. It is quite clear that there is a singular event that changes everything, and it's the point at which we have a vaccine for COVID. Before that time, before a vaccine is widely available, and the current estimate is it's about 2 years away. So we have to be thinking between 2 to 3 years away, right? Happy day if it comes earlier. We are going to see situations where things are going to keep starting and stopping. And if you keep an eye on the international news, for example, in Florida, so about a month ago, Florida opened with restaurants and bars and so on, right? And in fact, there were a number of small businesses in Florida who, because they've been closed for a number of months, didn't have any money. They went and borrowed money from financial institutions in order to open the bar, open the restaurant, get their supplies, do all of that. And then right now, because of the numbers, in terms of the infections, a number, and a lot of it's been associated with the bars actually, a number of the bars now have to close. So here's a situation which we should expect to replicate around the world, where there's just going to be start and stop. And even when you think you have opened in good faith and good conscience, the numbers can change in terms of infections, that it changes the dynamic of what's going on. So we have a situation where any kind of planning has to have a 2-year focus. Because if you focus just on tomorrow, you're going, right, because what do banks and other financial institutions that lend expect, right? There is some expectation of a steady cash flow, or a predictable cash flow. So you don't expect to lend into a situation where the person has opened and then 6 weeks later they're closing. This is enormously stressful for anyone trying to manage risk, trying to lend on risk. And remember, pre-COVID performance has nothing to do with how the business is going to perform now. An unbelievably profitable hotel in Jamaica in January may end up losing a lot of money in the latter part of this year. So the fact that for the last 5 years, 6 years, a hotel has done extraordinarily well is no indication as to what will happen to them in the latter part of 2020. So the first thing is
where the uncertainty lies, because unlike previous estimations that would have been done before, you could have looked at historical performance.
Correct.
The historical performance really is just historical performance. And as you mentioned, this start and stop is not just about Jamaica. So it's not just trapped in Jamaica, the start and stop. This is a worldwide pandemic, and the epidemic of a start-stop is across the world. So that even makes for more uncertainty, because you don't know what the global effects of the time will be.
Correct.
What a time.
Because we've also seen, right, what we call the rise of the cautious consumer. So even when you've opened and put in all the protocols, there's a whole bunch of people who are still nervous. They may not come into your theater, your cinema, your restaurant, your hotel. They may not get on a plane. And therefore, there's a group of consumers who are a critical part of the economy before, which also may not ramp up as quickly as we need. So again, that's part of what we call the juggle. But I want to just go through a few key steps. So just some slides. Again, you know the slides. We love the slides to anchor the story, right? Around the issue. So first is solution horizon, 2-year solution planning. We have to think in terms of 2 years, not just 3-month moratorium, 6-month moratorium, but be absolutely clear early on what happens after the 3-month moratorium. Because you're very likely to see the situation that the person you're lending to will extend beyond that, that period of time. Then the issue is what I call scenario planning. So let's assume, which we will, that it's going to be erratic cash flows and payments, and therefore it's going to be with the start-stop economy. So you're going to have to build into the financial solutions, the lending, you're going to have to build in the moratoriums and the thing that keeps working through until the end of the 2 years when we have a vaccine and the payments will become more steady. We have to understand the required levels of support. Again, take the example of a hotel, the parable of a small hotel, right? There's a bare minimum version of a hotel, which is leave it on ice, don't open, just cover the fixed cost, right? So that is like security. You need to probably maintain the pool. You need to clean the salt off the building, but you don't allow any guests in. And that's one way to just survive for the 18 months if you don't think you can get enough thing. Then you're going to try and open. Yeah. But you have to reinvest in the opening, finding back the people, all of that stuff, and then putting into place the COVID protocols that are required by the Ministry of Health or the Ministry of Health all over the world.
And some of them may be a bit cost prohibitive depending on the type of organization you have.
Absolutely. And the other thing is that, remember, there are things that you're going to have to open the moment you have even one guest, because you're going to have to turn light on everywhere. So the issue is the moment you move from fixed costs now to what I call variable, there is a minimum amount of guests that a hotel needs, and it's somewhere between 40 to 60% occupancy in order to start to pay for the cost. You open the restaurant, keep the pool man there, open the bar, etc., etc. So that's another level of cost. Do you maintain that? So on all of that is working capital financing until you become profitable, right? So this is also the conversation you need to have with your financial provider, which is, am I just going to keep the place on ice for 2 years? Am I just going to open a little? Or am I going to try and open big and push as fast as I can to profitability, recognizing that you may not get there, right? Then there's a notion of what we call, that everybody has to understand, sunk costs, which we have to let go. We've heard of situations where a financial institution gave a loan to a small business, and that small business, the reason the loan was given actually is no longer realistic. So half of the loan has been dispersed, half the money from the loan has been dispersed, but not the rest of it. And you're finding that they're not having a discussion about, well, how are we going to pivot this money to something else? They're continuing on the path because that was what the committee designed the loan for. So it's much easier to keep going for that. But the thing I always give people is this. You and Rochelle, you and I have agreed to meet at a restaurant.
Yeah, man.
And I start, so we're meeting at wherever. I start driving there. About halfway through driving there, you call me and say, hey, the restaurant is closed.
Yeah, at that point, we need to go home now.
We need to go home or meet at another restaurant. It don't make, I cannot say to you, boy, I don't drive half hour already, you know. I don't spend all this money on gas. I still go into the restaurant. That don't make no sense. Sunk costs is when you can't get it back. Yeah. So I have to make a different decision, a new pivot, which is we go back home, lock up shop, or we're going towards another restaurant, another goal. So that has to be part of the whole financing discussion. We started with this. I opened the hotel, but really I'm only getting 5 people. So that don't mean keep if you get 5 people, 6 people, 7 people each month. No. You can't keep going down that path. You have to say, no. We have to pull back because we're not getting enough to cover the cost. Then we have to think about the whole issue of credit adjudication. Now we've talked about what credit adjudication is before, but just to remind our viewers, credit adjudication is when a lending institution looks at your information about whether or not you should be given a loan. So your history, your this, your that, all of that stuff. They make a decision that says, yes, you are deserving of the loan. No, you're not.
Yeah.
What happens currently in credit adjudication meetings? Generally, the business situation is dominant. And the second thing as a decision, and the second thing is that your good credit rating is also dominant. Those two things. Now, in this environment, more than the business situation, character and capability of the owner needs to be weighed far more. You need an owner who can hustle. So you have an owner in front of you who, when COVID happened, he sold the inventory, he brought down his receivables, he cut down his costs, and another one who stayed and with deer in the headlights and didn't actually do anything. The better bet from a credit adjudication perspective will be the one who knew how to hustle, right? Capability of the owner is more critical now than the business situation, because you want an owner who can pivot and change because the situation keeps changing. That's what you're looking for, very differently. We also need to talk about creative lending structures. So outside the box, say leaseback example for equipment, where a bank buys the equipment and then leases back to the company, or to find a consortium of borrowers where a group of restaurants, for example, get together, give one bank all of their credit card business, and then borrow as a group. Again, things that haven't been done here, but we have to start being creative. Or syndicated lending. Each financial institution may not want to take on too many things in a sector, so they join up, get a sector, and syndicate the loans, which is sell the loans to other banks, right? Higher interest rates.
So this also gives an opportunity for lending institutions to kind of reassess even their product package and base to pivot to fit this current scenario.
Absolutely. So all the product solution design people in every single financial institution need to be working some late hours now to try and figure out what are the structures that can work. You may need higher interest rates because you need to compensate for the early erratic payments in the first 2 years of a loan. So if you have a higher interest rate, but built-in moratoriums, it means that you anticipate being paid back properly for the loan in 2 years post the pandemic, but it's built in. Similarly, you may need higher levels of asset support. So where the assets are available, you may need higher levels of support, again, because of the erratic revenue. And also, we have to figure out the ways to lean more on the DBJ credit enhancement facility to be able to support these, especially in the first 2 years, and the risks associated with that. Sector diversity, also critical. Broaden sector exposure. Look at the economics of emerging industries like online learning, or things like cleaning, which we know is going to be a burgeoning industry.
Yes.
And then the issue of protecting SMEs from themselves. One of the scariest things I've heard is some of the SMEs using credit card financing. We talked about that last week for ongoing operations. The financial institutions need to guide the panicked SME towards making sensible decisions, and allowing a business to use credit card to do its day-to-day operations is only going to destroy them a few months ago. So if you see your client rising in credit card bill and not paying it, and you see it's a expense associated with a business, you need to call them in and say, look, this is going to get you 2-3 months, but we're maybe 2 years into this thing, and we're going to cut you off in 3 more months at this rate because of what you're paying. So we really have to work with the SMEs to make sure they do sensible financing and also realistic scenario planning. Help them see that the cash flows that they expect are going to be erratic, and therefore critical that we all have that very open discussion. That's kind of the baseline of how we think about lending in an uncertain environment.
Yeah. Which takes us back to what we discussed from the very first episode, that it really is a time where it's not lending institutions on one side, the SMEs on another side. This is really a time for collaboration, and it will require those individual conversations and innovation in the product offerings given the scenario. And this is a worldwide pandemic. So this is something that is being seen across the rest of the world. And the fact is that in many of the developed countries, they're still trying to figure it out too. So we need to look at some of the examples. And as you said, we can look at the built-in moratoriums for loans. Have we ever thought of things like that? Nevada, before you go, because we have Lisa Bell and Dr. Blossom Amelia Nelson with us today, who are representing lending institutions. There's one question I want to leave you with. When the banks had come on and discussed the various moratoriums and financial relief, pretty much the periods of time ran from between 3 to 6 months. You did comment that the kind of forecasting that was needed was people needed to look to see how much money they had to the end of this year. Given where we are at now, have you changed that perspective? Because you now say it's a 2-year time that we're looking at. So what are you now saying about the 3-month and 6-month moratoriums?
Insufficient, unfortunately. And again, the 2 years is the generally expected point at which we will have a vaccine. So we have a binary moment: before vaccine, after vaccine. And therefore we need a view from now through to vaccine, and assume that the uncertainty will remain until we have a vaccine. So if we wrap up in contracts of 3 months and 6 months and don't have a clear view on both sides, actually, both the financial institution and the borrower, what happens afterwards? It's like we're deer in headlights. We're ostrich down in the sand. We're not looking. Actually, we have to look now. It's 2 years. It's 2 years. We need to plan for that, both at the overall Jamaica economic level. Every industry needs to plan for that, as well as each individual business needs to plan for that.
2 years old. So thank you very much for kind of laying a foundation for us, Nevada. You always are very sobering with laying your foundation of cement. So we are going to be joined now by Mrs. Lisa Bell. Now, Lisa Bell is the managing director of Exim Bank and has held that position since May 2010. She has over 20 years experience in providing financial, analytical, project, and general management expertise in both the private and the public sectors. And you know, Lisa would also have to carry the title of Justice of the Peace. Lisa, thank you so much for joining us.
Hi, Rochelle.
So, Lisa,
how are you?
So today, Lisa, you see where the time is hot. It is a difficult time, but we are still proceeding with hope. And we are particularly hopeful too, because we note that there was an announcement recently that Exim Bank has $8.1 billion in loans available for MSMEs.
Yes, it is.
So we're going to get to that, because you know we need some further and better particulars on that. But Lisa, for persons who have heard of you and heard of the Exim Bank, there's some people who are still uncertain. What is the Exim Bank? You know, we understand the regular banks, the credit unions, we know about microfinance lenders. What is the Exim Bank? Can you give us some context of how the Exim Bank operates?
Sure, absolutely. Well, first of all, Exim is an acronym for the National Export-Import Bank of Jamaica. And we are what is called an export credit agency, which exists across the length and breadth of the world, both in developed countries and developing countries. And what we are is development finance institutions. How is that different from every other bank or credit union? Is that we are usually actors of the state, meaning that we're funded by the government, we are a part of government, and we are really designed to provide solutions that further the government's interests. In this case, whether it is whatever the priorities of the government are, our job is to increase access to finance, use financial tools to make sure that happens.
Okay. So you are pretty much a state-run bank.
Yes.
Is part of a conglomerate of state-run banks that exist across the world.
Absolutely. Okay,
big thing.
Our focus tends to be on small and medium-sized enterprises because there are where the gaps are. So if you don't
Yes,
want the government doing what everybody else is doing, because most times the private sector can do that efficiently. What Exim Bank does is look at where there are gaps, where there are things not being provided to SMEs, and step into that gap. Once a gap is filled, we find another gap. In our particular case in Jamaica and in developing countries, SMEs are kind of the heart of your economy. And
exactly.
really, they make up, I'm sure you've spoken about this, a large percentage of the entities which exist in the country. They are the engine of growth. There are
Exactly.
there and access to finance continues to be an issue. So our role as the Exim Bank is to try and find financial products and services and help to address some of those issues that these SMEs are having.
So in that role at the Exim Bank, you do operate as a lending institution.
Absolutely. So we're not deposit taking. We
Yes.
really only lend funds or
Mhm.
offer certain other financial products because it's not only loans that we offer.
But
Um, but
so,
also provide business advisory services on a group basis that help to address some of the technical gaps that a SME may have.
so as you are as the Exim Bank is now looking at its operations, in the role as a lending institution, Nevada was just going through the uncertainties of the environment and this 2-year outlook for a vaccine being in place. And I'd like your views on that 2-year outlook, and how does the Exim Bank now make its lending decisions in this type of uncertainty?
You know, every time I hear Nevada, and I was listening in on your segment just now, I'm amazed because I share a lot of his points of view in the context of we really are managing in unprecedented times. And if it's unprecedented for us, it is even more unprecedented for the poor little SME who's struggling to survive in this context. And I don't mean that in a derogatory manner, but it truly is a very difficult time for a small and medium sized business to navigate these waters. And I agree with him that lending in this kind of environment, because we kind of see ourselves as a last resort lender. You know, the private sector and the commercial banks will step in and help. But where they're not, the state has to step in. And I know you've looked at lots of programs across different countries. And we too are looking at those programs about how we preserve value, how we help people through this emergency first phase and then build them back through to recovery. So the truth is that we are doing a number of things, and it has forced us to even to change the way we look at lending. Because as you said, and I know you're not a banker, you can't look at historicals anymore. And that is classic lending and credit adjudication and credit analysis. Look at how the business has done in the past so you can determine how they will do in the future. That is no longer sufficient when you're looking because you really don't know the past may not be a predictor of the future.
Okay.
So we've had to look at processes of getting more integrally involved in understanding what is happening in the current environment, how what is happening in the current environment affects what is happening overseas and vice versa.
Yes.
Understanding deep industry analysis, macroeconomic analysis, some things that some analysts have not even thought about in a while, you know, but it is going to be important to continue reading the literature, understanding what other countries are doing, and then applying them in our current climate. The truth
So
is, go ahead, Rochelle, go
no,
on.
because I was just wondering, because as an SME, so an SME is hearing us have this conversation, and they are like, this credit adjudication in the uncertain time, that sounds like some proper high science. And what I want to understand now, if I were to go to the Exim Bank now, and I see a question here from Kian Jackson. I showed Exim pending POs and also 6 years good track record with very little debt. And the feedback I received was that I need significant collateral. So persons are still struggling because we still are, our considerations are still that pre-COVID time. And we're wondering now, for an entity like Exim Bank, what do we need to take to you now when we are seeking a loan? Pretty much.
You're gonna have to come with some of the traditional stuff, but it's not going to be enough. So you have to show us your audited financials if you have them. Traditionally, we don't lend to startups. We kind of lend with some history, but we want to see what you have, need your bank statements, understand you'll be able to look at your cash balances in your bank account to see how the flows have been back and forth, what your balances are now going into this environment. Those are the kinds of things we need. Unfortunately, we do look for collateral. Collateral is a requirement for lending. Practically what it means is that a requirement for lending. There are some options, and we mentioned the DBJ's guarantee program, and we are the most flexible in the context of lending. If you're a manufacturer, we are more likely to take a mix of collateral, which will include maybe hard security, which is mean like a building or a house or whatever, but we also take equipment, we also take receivables. We combine them to determine what is the best approach for you. But really and truly, any SME is going to a financial institution is going to have some form of collateral. We have a very small window for what is called unsecured lending, but I think that is only to a maximum of 5 million, and you have to be a member of the JMEA.
Okay.
But it is an issue that our SME is going to have to grapple with.
So, Lisa, I know that our SMEs, as they're hearing this, they're saying, Rochelle, we know we have to bring back Lisa on to give us a full lesson of the Exim Bank. But I know that the burning question, because persons would have seen the recent headlines, which said that Exim Bank has $8.1 billion in loans available for the MSMEs. So, and it did say MSMEs, which is micro, small, medium enterprises. We want to understand, how does this work, and how is an MSME able to avail themselves of this facility?
All right. First, I need to correct one thing. It is not for MSME. It is for SME. Traditionally, Exim does not lend to micro enterprises, and there's a reason why. Lending to micro institutions is highly specialized, and there are only a few institutions that do it. We do have a line through Jamaica National Small Business, but we do not specialize directly in SMEs. That being said, we had gone to the Ministry of Finance, who is our parent, and asked for, in fact, enough funds to make 12 billion in financing before COVID. However, we were approved for 8.1, and therefore, coming out of this unusual stay-at-home environment, are now gearing up to lend this 8.1 billion. You can be any productive enterprise, operate an exporter, a potential exporter, providing goods and services to an exporter. We have some specialized facilities for the tourism sector, meaning if you're what we call linkage companies to provide goods and services into tourism, as well as some specialized products for exporters, which I'm very, very excited about. We can encourage you to SMEs to come in and see us and to understand what we can offer. And if we can't, if it's not something we can take off the shelf, we can craft a financial solution that kind of meets your needs.
Okay. So I know our SMEs, one of the complaints that has been, that we have heard over and over, is the complexity of applying for any kind of loans across financial institutions. And so I know some people are listening and they're saying, but I bet you forget all them kind of access to the money there. I want process, we need to give DNA sample. What kind of information needs to be provided, but also what is the turnaround time for the application process? Because we do recognize that people are working in an uncertain time, but they also have to be moving quickly. What's the kind of application turnaround time, and what's some of the information? You did mention things like audited accounts or some accounting documents. But what kind of turnaround time are we looking at? And what's the complexity of the application process, or simplicity of the application process?
The application is available online, and it outlines all the requirements, all the documents you would need to submit to us. If the loan is below 40 million, and that's a pretty big loan for a small enterprise, maybe average for medium enterprises, it should take no more than 2 weeks. If it's over $60 million, it has to go to our board, which normally takes about a month. But what is the major issue? And I know SMEs listening are probably saying, no, it always takes longer than that. The truth is that sometimes the collateral being offered is tied up at another financial institution. And for us to get access to register whatever charge, in other words, so that we can say that we have an interest in this collateral, takes a longer time than usual. And it actually kind of just speaks to the need for collaboration among the financial institutions, particularly at this time, so that we can work quickly to get the money where it really, really, really does need to be.
Yeah. You know, Lisa, as I'm sitting here with you and seeing, and I'm getting a time signal, I'm like, but I could sit down here the whole evening with Lisa, talk about this.
And there's so much more I need to tell you. So new products, so we're going to have to do that another time.
So we will be bringing Lisa Bell back from the Exim Bank so that we can talk in more detail. But Lisa is still going to be with us to answer questions. And please send in your questions, because we're actually going to be joined now by Dr. Blossom Amelia Nelson, who is the chairman of the Jamaica Association for Microfinancing, JAMFIN. Now, Dr. Blossom Amelia Nelson, a very familiar face to many persons, is Jamaica's first female Postmaster General and is the former Pro-Chancellor and Chairman of the Council for the University of Technology. She is a woman of great acclaim, and we are so pleased to have her here today in her capacity as Chairman of the Microfinance Association. Dr. Amelia Nelson, thank you for joining us tonight.
Thank you very much. It's good to be here. I've been totally fascinated with the discussion and Nevada's presentation as usual. All his presentations go pow, you know, and of course they do, don't they?
They do.
Yes. And I know Lisa's there with all her permutations and different ways of doing things and trying to help. One thing she needs to say, she goes through commercial banks. She has to go through an AFI. I didn't see that came up. You don't lend directly to the business.
Yes. So in fact, that's why we're going to deal with some of those other intricacies. Yes. Yeah.
Right.
So, Dr. Amelia Nelson, you are chairman of the Association of Microfinance, and I know some of our SMEs over the years may have been a little afraid of going to a microfinance institution because persons saw those institutions as loan sharks and didn't fully understand this industry. Can you give us a little background of how this industry operates in the economic environment?
Well, the industry is a very, very important player in the financial space in Jamaica.
Yeah.
It hasn't really been recognized or got the recognition that it should over the years, largely because it's not a regulated sector. And you know that we are now working on the Microcredit Act so that it can be regulated, because as it operates now, there are limited liability companies really that make loans, and we estimate that there's about $20 billion in circulation at any one time. One of the problems we have with the sector is that because it's not regulated, we just don't know exactly how many people are in the sector. Some says it's as much as 300, and some says about 120, but we're talking about right across the country. So that is one of the problems. We don't a paucity of data and also of knowing who are the players. That the sector caters to people who are largely unbankable, but also people who are bankable, who need loans quickly, who don't want to go to their commercial bank for one reason or another. The sector also does quite a bit of what we call payday loans, which is supporting individuals who have deficiencies in their budget And so they want to borrow for just a month or 60 days, short-term loans. Unfortunately, they say one bad apple spoils the whole bunch. So the idea came up that they're largely predatory lenders and with unacceptable collections practices. The truth is that there are some people who engage in that type of activity. Not so much more now, because customers are more aware that this should not happen. And customers go to the consumer affairs and they will report these companies. The other thing that people complain about, some people, is that the interest rates are high. And predatory interest rates is a term that I think people use. As a matter of fact, one of the issues that we have now with the microcredit bill is that the preamble to the bill, you know, the thing that sets up why we're having this bill, uses some of those terms, predatory lending and that type of thing, and we're objecting to it because we're saying you can't. And then prejudice yourself from the beginning, because it does turn out that Microcredit Act is more of a punitive act. It has 46 criminal offenses, possible criminal offenses. Why would you want to make an act that you can lock up people at the drop of a hat? So we are we're fighting back, and that is one of the holdups with the law.
So, Dr. Nelson, as you are looking at the current scenario, so you have heard the comments that Nevada has made with this 2-year outlook for a possible vaccine, as well as Lisa describing a process within a particular lending institution, Exim. And I know viewers are saying to themselves, one, microfinance institutions, are they offering moratoriums? Because it's a faster loan process. So we haven't heard anything about moratoriums or deferrals. But also, as microfinance institutions make their own credit adjudication assessment, is there a credit adjudication assessment that is made? And how is it made in this current uncertain environment?
That's the whole mouthful. First of all, there is a credit adjudication, and that is a unique and specific discipline that MFIs have developed over the years. As a matter of fact, with this whole access to finance program that we are a part of, one of the things is the commercial banks would like to know what is our credit adjudication process. I think it has a lot. And the truth is that a lot of it is just knowledge that you gather. It's almost intuitive, right? Some people have it documented. But you see that thing about character and competence that Nevada alluded to earlier? That is a big part of what MFIs do. Is can a man hustle? Can a man turn around? If this thing crashed, can he make shoes instead of handbag? You know, does he have the guts and the determination to climb back up the cliff and get on with it? Okay, and I think the loans are largely short term, you know, like up to a 2-year horizon. We rarely get into like 5-year loans and that sort of thing. And because they're short term, you're able to get a better handle of what you're talking about. Working capital support. Are you getting inventory? What is the turnaround? And these things, they usually have a shorter turnaround time. So we would lend to buy the raw material to make the handbags that you're going to sell. You're doing leather bags. So you're not all the way down the road with you're buying machinery and then you just go and try to get an order. Usually people want that money now and they're ready to move. So you can see where the money is going, you can track it, and you can take back yours in short order. So that is it. But one of the things that we have to recognize is that MFIs don't take deposits. So they don't have any other way of earning income. It's not that they have investment portfolios and this sort of thing to push on them. So they're really very, very vulnerable. So that means that they have to hold tight to their money. They have to track it. They have to know what is happening to it. And they have to know how they're getting it back. And
yes,
MFIs, their lending is more costly really than anybody else, because you know, one of the problems why commercial banks don't like to lend to SMEs is because it's too much hands-on thing. And man calling you every minute, and the woman calling you, and then they're too mobile, and you thought they were on the Hanover Street, but you find out that they're out in St. Thomas now, and you don't want to send somebody all over the place to track them, so they prefer not to touch them. But the MFI will know where they are and help to advise them every step of the way, and they come in and explain what is happening to payments. You did mention, do we give in this environment? This is really a challenging time for MFIs, and the fact that they have to collect the money to re-lend has created a liquidity crisis for them, and they really need some relief for money. I don't know if Exim could think of providing some money, seriously, because you do have some of them that borrow from you. But
Dr. Nelson, as you are making this point, and you had referred earlier to some of the very penal provisions in the draft legislation, based on your description of the role that MFIs play in the financial ecosystem, there is a significant role that the MFIs will need to play in the COVID recovery period for SMEs. But as you are seeing a significant role, what kind of changes or amendments need to be made in the draft legislation to allow MFIs to continue playing that significant role?
Okay, well, that is a tough question. I think the issues in the legislation are not directly related to us not being able to pay that role. I can't think of any right now. One of the problems that we have is that the Consumer Affairs Commission is written into our legislation. And if we have a regulator at the Bank of Jamaica, we don't understand why the Consumer Affairs Commission has to be sitting in the middle of the law. So is it that we have two regulators? But you know, that goes back to the assumption about the predatory lending. And we're pushing back on that. But they're really, the thing that is the greatest issue is who is going to take the risk. And, you know, out there, I've been in development assistance since the 80s after I left teaching, and nobody wants to take the risk. The international agencies lend the government the money, but they're not taking the risk. They say it's taxpayers' money to lend to the government. The government is on lending it through the development banks, but they are not taking the risk. The development bank is lending it to you, but they are not sharing the risk. So the Credit Enhancement Fund is a giant step, because for the first time, you're going to see some sharing of risk. So the MFIs at least are out there on their own, and all they have to fall back on is that they better collect this money from these people. So you're back to credit adjudication again. And it is just smart lending.
And Dr. Nelson, I want you to hold that point, because as you are speaking, you know, the questions are coming in. And I'd in fact like to invite Nevada Paul and Lisa Bell back on so that we can just delve into some of the questions that are coming in from our viewers. I see Nevada is back and Lisa, and the questions are coming in. I see a question here from Christopher Durrell, and this is for you, Dr. Nelson. He says, besides the hustle of the borrowers, are there specific industries that micro lenders are lending to mostly right now?
I can tell you the ones that they're not lending to. You know, the ones that have a real problem would be anything in the transportation industry. transportation and entertainment, of course, as you can imagine. You know, I have no idea that entertainment was such a critical part of our economy.
Oh, yes.
Because the people who cook and the people who transport stuff and the people who provide all sorts of things for support for the entertainment industry. And once you're not having those big parties and having those big shows, a lot of people don't have an income. So we're not lending to those, but we're looking at agriculture. And you know, from I've been born, there's this thing about agriculture is important and we're going to invest in it and this and that about that. I don't know what is the problem with us and agriculture. But MFIs are looking to support the agricultural sector now.
Yes.
In some meaningful
That's a good thing.
Yes. Yeah. And but mostly what they're trying to do now is to survive, though, you know. Because if they're not going to get liquidity support, they're going to have to really contract. And so Nevada, we have to look at getting that financing going for them with some sort of giving them some leeway to get themselves back on track, because we really can't afford to not have MFIs. That is people's daily bread, you know. Yeah. That's how we children.
And they are playing such a significant role in helping to fund the SMEs. So,
yes.
Lisa, you have heard what Dr. Nelson has said about the industries that that the MFIs are trending not to lend to. And I know our viewers are wondering, for the Exim Bank would have done some kind of assessment of the type of industries that it would kind of be focusing its lending on. Have you done that kind of assessment? And are there particular industries that you're focused on?
There are, and there are ones that we're going to have to pivot to, as Nevada would say. We are focused on agro-processing, on mining, on tourism and its linkages, anything in the export value chain. I am particularly excited for our small exporters. I mean, I know you had mentioned this before, but one of the impediments of moving into export had always been time to market and price to market. As the trends have changed in terms of how consumers consume goods and how they, the digital age and how time to market is really whether you can get your product online and in a space where a consumer can see it, it has created huge opportunities for that castor oil producer in Clarendon. If he can find a way to get his product onto a global digital shopping portal, he can compete. And I think that this is one of the most exciting evolutions coming out of this crisis. If you have a digital presence, you can sell your goods. And I think e-commerce is going to become incredibly important in the context of helping those kind of MFIs as well as small and medium size who were locked out of the market because they couldn't get their products in the first world space.
Rochelle,
Rochelle,
people who are doing very well, you know, are the people who provide personal services like hairdressers and barbers. They're still keeping afloat, and there's still some demand in loans from those persons, estheticians and persons like that, you know, personal services.
What does that tell us about our people?
Nevada, I want to bring you in now because I see the nod on your face that you're saying, like, I told you so. Because I know in a few episodes back, you did indicate that these were the industries that were going to be first out and still able to keep afloat personal services. So as you heard Lisa and Dr. Nelson just speak on their different areas, what are some of the things going through your head now?
Yes, this whole idea of the pent-up demand, because that's what they are, what we call the V-shaped recovery. Yes. Everybody was at home. The one thing that, as we've talked about that, the one thing that every Jamaican woman you hear wanted to go to the hairdresser, wanted a professional hair done. So when Dr. Amelia Nelson talks about the hairdressers and the barbers, that was an industry sitting on pent-up demand. The moment the gate flood on that, they are right back. Now, obviously, many other industries that are critical to our overall Jamaican economy, like tourism, like remittances, those kinds of things, right? They're not going to come with the kind of flood. So those industries are going to have to be managed carefully to make sure they survive for 2 years. In the interim, by the way, we have to be pivoting the Jamaican economy because it itself needs to move. You know, Lisa Bell talked about being able to sell abroad. A few weeks ago, we had Macintosh on, who knows how to sell through Amazon.
Right,
helps people to be able to sell on Amazon, right? So anybody who has a product now that they're manufacturing, you need to work with the various exporter thing to make sure your product is up to speed, because now you can be global. And right at this point, Jamaica is not in a situation where our traditional industries are going to come back fast enough. So there is an opportunity for the people who make strong products. And right now, everybody's global, right? In terms of an interesting sauce, an interesting fruit, all kinds of things. Agriculture. That is the stuff that we can abroad. And I will say, there's a unique thing that's going on now, which can be seen as positive or negative. All of that pullback of advertisers from Facebook means that the price of Facebook advertising now is going down. If you are looking to reach a US market, now I'm not saying now is a very good time to work with a social media company to push your brand and push your product there. Because if Procter & Gamble and all of these big companies that spend on Facebook are now absent, your little ad budget is going to have far more reach. So anybody who's interested now in becoming an international player, it is a very good time.
And thank you for that comment, Nevada, because we're actually going to be wrapping up this segment shortly, but I want to get some final words from Lisa and Dr. Nelson. And viewers, we're wrapping up this segment, but we are going to be joined by the president of the private sector organization of Jamaica, Mr. Keith Duncan. He is backstage because we are going to be talking to him about our celebration of National MSME Day, which was on June 27th. So Lisa, I have to get some final words from you. And I think we also have to be looking to book you, because we're going to need a full episode to really get into the details of Exim Bank. So Lisa, what final words would you give to our viewers at this time?
You know, one thing I must say, every crisis creates opportunity. And, you know, at every time the world has had a crisis, it has always been followed by innovation and transformation. And I think we need to, as difficult as this may be, look at the huge opportunities there are for Jamaican companies. There are products. One in particular I must tell you about, trade credit insurance. We're the only entity in Jamaica that provides it. It provides protection when you're going to sell your product in that new market. It protects you in case your buyer doesn't pay you. We're the only one that offers it in the country. But it's a very powerful product when you're stepping out. And our job is to step right behind you and hold your hand.
Okay, thanks for that, Lisa. Dr. Nelson, what are your final words to our viewers?
The MFI sector is fighting back. We are sharing ideas. We are working with the Caribbean Microfinance Association through webinars to help our members understand how to manage during these critical times, what type of measurements they have to make, what type of risk analysis they have to do, and what type of strategies that they use with their portfolios. We're seeking funds for them, and we're looking to help them improve best practices. And JAMFIN has now launched a program in collaboration with NCB Insurance for credit life insurance, and also for insurance for loss of income over a period of time. So we've been marketing that to MFIs, yes, and that will give them some sort of cover under fire. And we sincerely hope that we all make it. We're holding each other's hands. Some are in the boat. As I said, some have on a life jacket and a rope to throw them, and you have to deal with that until you can get in the boat. But fighting back. The problem is that we don't know how long this is going to last, and that is the thing about it. Yes, the length of time, and that has to be factored in the recovery strategy, the different scenarios in terms of length of time. One of the things that we have, I know I need to get off now, but because we deal largely with the informal economy, and nobody knows what that is, that is an advantage, because maybe there's more money circulating in that economy than anybody knows, because these people are not registered mostly and so on.
Yeah.
Okay.
Thanks very much for that, Dr. Nelson. Dr. Nelson is chairman of the Jamaica Association of Microfinancing, JAMFIN. Thank you very much for joining us. Lisa Bell, managing director of Exim Bank. Thank you very much for joining us, ladies. And we look forward to more conversation with you. Thank you. At this time, we are going to welcome a familiar face to many. I think this is the first time he's joining us on the program. Mr. Keith Duncan.
No, he's been here before.
You made a guest appearance before. Yes, you did, in the early days. Keith, welcome. Keith, on June 27th, the world celebrated World MSME Day. I know, and all the persons who have ever come into contact with you, and certainly in your role as president of the PSOJ, you have been passionate about growing our MSME industry and making finance accessible to our MSME industry. The word you keep saying is we need to unlock the industry so that the economy can grow. So I'm going to hand over to you, because I know you have some words. You have a message today for our MSMEs.
Well, okay. Thank you, Rochelle, and thanks to Nevada project architect, lead architects. And let me say, I'd like to acknowledge you guys for your consistent efforts with COVIDCast. This is an excellent program. The training and the strategies that you guys are imparting to this segment is so vital and so important at this time when we're faced with so much uncertainty. And really and truly, I have to pay those kudos to you guys. And to consistently keep it up. It is really good, and innovate, create. Always thinking, that critical thinking, acknowledging. No, we embarked on this journey for the MSMEs to really focus on this sector and the segment of our economy, because they contribute 50 to 60% of GDP, employ 70 to 80% of our workforce, and yet they are the most vulnerable. So when we face COVID, this uncertainty of this virus and impact on the world and the economies of this world, the most vulnerable sector is the MSME sector. So, I have today to pay tribute because, to this sector, because we are here to really support them, acknowledge them, celebrate them, and for being the backbone of our Jamaican economy. Even in spite of the fact that they have not had the access that they should have, that they haven't had the products and services that they should have available to them. And we are here, week in, week out, day in, day out, the PSOJ SME team working to support and to really advance the cause of the SME sector. No, and we're gonna get there. I mean, we're gonna chip at it day by day by day by day, and we're gonna have those weekly meetings where we strategize and we try to figure it out, and we're gonna have to pivot as we have, and we're gonna figure out the training programs. But we are here because we want our Jamaican economy to be strong, and it's our MSME sector that drives the economy. And if we can get them to be creative, innovative, really change and pivot and really, from an innovation perspective and from just how you do business, we get them to grow as a sector. I think that it will redound to Jamaica's benefit. You know what I mean?
Yes.
And so
yes, absolutely.
We're
Hey,
here
Keith,
to acknowledge them, celebrate them, love them up.
Keith, curious as to how you see as CEO of JMMB, the question that was on the table tonight, which is how does one think about lending in an environment of uncertainty? How do you see it as one of the lead bankers in the country?
Well, I think how we're viewing this is that this is a very dynamic environment. Things are going to change week to week, day to day, month to month. We could have a super spreader tomorrow, and all of a sudden, and it's the virus spreads, and there has to be containment strategies, which further slows the economy down. So we have to take account for this. Now, what I'm really happy about though is because in our meeting yesterday in Nevada, Rochelle, what we heard was that the Bank of Jamaica was engaging to look at where do they have to pivot, do they have to extend. So therefore, I think the Jamaican authorities and the bankers, the microfinance sector, the PSOJ SME project here, everyone is looking at this as work in progress, and as we have to now change our strategies as we move along. And even if the Bank of Jamaica has to, look at greater force, I think they will. So will the banks. I believe they will. And we're going to have to get creative along the way, because because if, like, for example, if tourism doesn't open, and we heard a report today of how the impact of tourism, if that is very slow in opening up, the impact throughout the economy because of the deep linkages, we have to be open. Now, there are gaps in terms of the whole SME sector, in terms of those who are just not being able to get the attention that they get, because either they're in the informal sector and their care program is looking to those who have officially registered as TRN taxpayers in the net. You know what I mean? But there's a bunch of them. 40% of our economy is informal, and therefore you could have had these businesses that were doing good before, but really now can't access the help that they need, and they weren't officially in the banking sector. You know what I mean? Or in other sectors. Now, that is an area and a blind spot that we now need to really ensure that we can, one, address them, but two, look at it as an opportunity to incentivize them, to bring them into the formal sector, and to be able to grow them. You know what I mean? For them to work with them and to grow them and to show them the benefits of being in the formal sector. You know what I mean? So from a strategic perspective, we have to remain very, very nimble in this period. The Bank of Jamaica, the Ministry of Finance, the Government of Jamaica, the bankers, microfinance, credit unions, the private sector organization of Jamaica, the PSOJ SME project has to remain very, very nimble and look to make adjustments along the way.
Yeah. Not business as usual at all.
Yeah. And really a need for fast learning and adjusting. I have to accept that that's part of what we are all doing. Nobody's a quote unquote expert in this. We're just learning as we go and trying to adjust as quickly as possible to make sure we fill in those cracks, as Keith has said.
As we have done with the virus, because when March 10th, when we had the first case in Jamaica, no one knew what to expect, and we were lock it right down, everybody, and then we learned, we understand this, and we're now able to move into containment strategies and really look to manage. And yet there's still so much uncertainty, but yet we're managing. So it's evidence-based, data-driven, active management.
Yeah. And Keith, as you are on the point of evidence-based and data-driven, about 2 weeks ago, we had members of the COVID Relief Fund on our program talking about how that COVID fund is applied. And since we have you here, because we know that you have been integral in pushing this fund through and ensuring that it is transparent, it is accountable, and it is quickly doing what it is meant to do. And in fact, it turned around from conception to the first package being given out in 6 weeks' time. So that is pretty, as unprecedented as COVID is, that is unprecedented. So we can do it. So just some words from you on the COVID Relief Fund. And I know persons have been asking, is it still up and running, and how can they be a part of this?
Well, the Stand Up for Jamaica, Standing Up for Jamaica, now this is a special project. You know, it pulls together public sector, private sector, civil society, NGOs, players together in working in a very seamless manner. And because it would come from a place of wanting to do good and wanting to help, and it shows with leadership and with partnership what you can achieve as a country, right? There are no egos. Nobody wants to be the leader in the house of the rising sun. It's all about just doing it right. So therefore, we pull together the Council for Voluntary Social Services as project manager, Safra Brown. We pull together the Jamaica Constabulary Force, who delivers all the packages and are in the communities every 2 weeks across Jamaica, delivering packages, building relationships and trust. The Jamaica Constabulary Force with the people in the communities who saw the police as the bad guy. They are now in there building trust with the communities. The children in these communities used to run from the police when they first went in. They are running to the police now, right? The police are now starting to deliver homework to the students, to the young children in these areas, right? Because we have built relationships. The Jamaica Defense Force has built out the whole logistics for this thing. The Jamaica Customs Agency has provided trucks. Today they gave $192,000. Their staff came up with the money, and they gave $192,000. Jamaica Customs, right? So therefore, people are coming on board, and and we're building relationships in the community. So it shows that that caring for each other, from the big private sector organization of Jamaica with all the big businessmen them, and the Jamaica Constabulary Force was looked as like a force of aggression, moving from aggression to the force for good. It's so important in building trust, in building one Jamaica, in building one Jamaica. You know what I mean? Where we all coexist and care and love each other. And I think that's what's going on. And we want to build on this. We want to build on it. But it's really successful. The program is every 2 weeks we're in these communities delivering packages. We have been able to reach out. We just did a whole almost $2 million of packages to the Household Helpers Association of Jamaica, because a lot of them were sent home in this crisis just because of the risk. You know what I mean? And then we delivered packages to Mrs. Shirley Price, the president, yesterday. And that will last, that will be good, good support for them, with the women with AIDS, the disabled community. But yet we are in these 25 communities right across Jamaica, the most vulnerable, delivering these packages. And the policemen are in there going to these crevices and corners in these communities that they have never been to. Like a policeman was telling me last week that he ran into a 101-year-old lady giving her a package. And she said this was the first time she was ever having a conversation with a policeman. And the guy cried because he just could not believe it. Because he's coming from a place where he would go in there with an M16 and stand up on a corner to know he's doing delivering, along with the voluntary organizations. So the police youth club are there, Salvation Army, Red Cross. We're all in these communities. You know what I mean? So it's really an example that public sector, private sector, civil society coming together to really make it work. And we have raised over $180 million. And we, we're strategizing, because we got a little bump in the road with our international diaspora campaign. But we're strategizing and trying to pull that back together. But it has done well. It has raised probably around almost 10 million Jamaican dollars already. And that's led by Intelligent, and which is my nephew's company. Right? That youth is one of the brightest young men in Jamaica, who is changing the landscape of social media in Jamaica, and we're so proud of him. He's going to grow from strength to strength, and he's an example of a small and medium enterprise that's going to grow from micro to small to medium to large.
Yes. And I think that's such an important point of tying it all together, because what we are all working is to build this one Jamaica for all of us. And when we can see our young people too as small businesses who are not only able to run their business, but to use their expertise to help with an important fund like the COVID relief fund. This is what Jamaica is looking for. So Keith, we cannot thank you enough for joining us. You've really invigorated our viewers. I see Romeo Stewart saying here, wow, I love the work that the PSOJ is doing. And he says, in this pandemic, you are changing lives for the good. So thank you very much for joining us.
Thank you, Keith. Thank you very much.
Thank you, team.
Thank you again. Thank you.
Rochelle.
Wow. Episode 15. I don't know if episode as you know.
Yes, that's right. A lot of content created. A lot of training. Yes. Everybody remember that the primary purpose of this is to create training for our small business and modules. And we're going to keep bringing other trainers in, bringing experts in, and making sure that we get the information that we need. And remember, all of the historical episodes and the historical memos are also available. So if you want to know about pivoting, if you want to know how to talk to your bank, if you want to try and get a loan, if you want to figure out how much liquidity you need for your business, it's all available as part of our historical record and being here. And just to wrap,
PSOJ is SME at psoj.org. And this is our new time, 7:30 p.m. on a Thursday. I see Shelly Ann saying, I appreciate that the program was aired at this particular time, which is personally convenient. So we have listened to our viewers, and this is our new time, 7:30 every Thursday. And please try to catch up on our episodes. They are filled with content that is very useful. As someone just mentioned, they wonder if Nevada was looking way into the future. He was, when he mentioned the pent-up demand in the hairdressing and barber industry, and we are seeing it right now. Soho Jamaica says, so grateful to Nevada, Rochelle, and Keith for trying so hard to support the SMEs. You offer much invaluable info. We are here to serve our SME community. We recognize the value of this community, and this community, as it grows, is going to unlock wealth for Jamaica so that we can move forward and invest in education, the road, security, crime. We are committed to this effort. Nevada, how are you going to wrap up today?
We'll wrap up 1 minute. Back to the slide, just for those who missed it at the beginning. Lending and borrowing in an uncertain environment. One, solution horizon. We have got to be talking in terms of 2 years. Why 2 years? It's about 2 years where we're going to get a vaccine. And therefore, we are going to live in uncertainty while we don't have a COVID vaccine. So all discussions and planning must contemplate 2 years. We must have scenario planning for this jugga economy. Things are going to start and stop, pause, go back, not grow as fast as we can. And therefore, we need to do scenario planning with our bankers, financiers, etc. Understanding required levels of support. Are we going to be closed and just put the business on ice? Are we going to kind of open but need working capital cash flow for a couple of years until we get profitable? All of that needs to be part of the discussion. Sunk costs and pivots. Don't worry about what used to be. Get over what used to be. We now need to look forward. Don't keep investing in a dream that may be dead. You may have to pivot. Talk to your bankers about pivot. Rethinking credit adjudication to the financiers. Character and capability. Hustle is going to be extremely significant, more important than the business situation. If a man used to make shoes and can switch it to make handbag, and that's a better thing, that's what you want, versus locking him into one type of business which you agreed together. Creative lending structures, right? Not a basic thing that we used to do. All of those brilliant people who sit in our financial institutions, it's time to rethink how we're going to manage the risk and also create different ways and structures of lending. Higher interest rates may be one of the things that's needed, especially to compensate for near-term erratic payments. So if you have 2 years of erratic payment, nobody says you shouldn't be able to charge for it, but just expect to be fully paid for it after the 2 years. Higher levels of asset support may be required, And where that's not possible, we have to lean on the DBJ, Credit Enhancement Facility, more aggressively. Sector diversity, look at some of the emerging industries, whether it's social media, whether it's cleaning, whether it's testing, once we start doing private testing. These are areas that are going to be in the near-term growth areas. And then protect the SME from themselves. My particular concern and worry are the SMEs who are going through this with credit card debt. You must steer them away from that. We know the trouble that happens at the end. And broadly speaking, there are two kinds of SME situations that we should be concerned of as Jamaicans. One, a business that is viable outside of COVID, but not in it. So a business that was good before COVID and will be good again in 2 years, we must find a way to support it that it survives, because if we lose it, it doesn't easily come back. Please remember how we lost manufacturing after FinSAC, and people could argue that we have still not gotten back a manufacturing base. We became a nation of traders. We lost what was a burgeoning value-added sector. Any business that was good before COVID and will be good after COVID, but cannot manage the 2 years of uncertainty, we have to find a way to embryonic it, right? To make sure it makes it through. The second thing we're concerned about when we think about PSOJ is businesses that were viable, but not visible. We're talking about that informal sector. So somebody who was running an informal business for 5-6 years, yes, it wasn't registered. Yes, he should be registered, but that is a good businessman. And he was employing people and a critical part of our economy and sending picnics to school. We also have to find a way to bring him formal and to make sure that he comes out and asks for support, because many of these guys are just hiding under the thing, and we have to bring this forward. They are a critical part of our economy. The next 2 years without a vaccine is critical, and the decisions that we make will determine whether out of this we collapse into that scary, very third world place, or we shoot out the gate and become a serious economic power. But the decisions we make today with a focus on a longer term, 2-3 years, is what is going to create what happens after this. It is time. This is Jamaica. We have got to make it work.
We have to make it work. We are building one Jamaica, and we are going to be a Jamaica that emerges from this a successful nation. But we have to make some serious decisions now. Thank you very much again for your input and valuable lessons, Nevada. For those of you who do not currently subscribe to our memo, don't let another day pass. Please subscribe. Email us at sme@psoj.org. Remember, our new time is 7:30 on a Thursday. 7:30 on a Thursday. Join us every Thursday at 7:30. We want to thank our viewers for staying with us for another week of COVIDcast. This week we talked about lending and borrowing in an uncertain environment. We want to thank our guest, Dr. Blossom Amelia Nelson, who is chairman of the Jamaica Association of Microfinance in Jamfin. We were also joined by Mrs. Lisa Bell, managing director of Exim Bank. And we also got some valuable information and a tribute to our MSMEs in celebration of National MSME Day from the Private Sector Association of Jamaica, our president, Mr. Keith Duncan. If you're wondering, this is the first time I'm joining, where can I see the previous episodes? Because there have been 14 more episodes. Please go onto our Facebook page, go onto our YouTube page, PSOJ Financial Access, the PSOJ website. All of the information is there. In the same way you would stop and binge watch Netflix, stop and binge watch to grow your business. So see you again next week for another episode of COVIDCastJA. I'm your host, Rochelle Cameron.